In this video, I want to walk you through a beautiful setup on the oil market. Now, oil is not a market that I trade, and so this is more of a video lesson to understand the template, the price behavior, okay? Now, before I actually start showing you the setup, I want to show you the forecast that I provided to my private community. And here we can see that I've identified there's a pump, okay? I've provided some notations on the setup itself, and then the target was down here. Okay, the overall target where the pump began, which is around the 81.60 level. Okay, so in this video, I'm going to walk you through that setup and how we could have traded that setup so that you can, in the future, identify this type of a pattern because it is repeating, and not just on oil. These setups, these patterns, these templates repeat on all instruments almost on a weekly basis. Okay, so the first thing that gets me kind of interested in the market is when I see a pump up, okay? And you can see that's here, right? And that is on the 23rd of April, which is Tuesday, okay? And so essentially what you have here is the start of the week, which is Monday, okay? Tuesday, which is the next day, then extends that range, which means that we've gone above Monday's high and we've continued to trade higher, okay? Now, Tuesday also gave a really good short setup down to where? Down to the low of the week, right? Which was established on Monday, okay? Essentially what the market's doing here is trying to stop out traders who have bought into that market on the Monday. See, it's come straight down into where that position began, right? Where traders would have got into. That's how the market works, okay? It's also then coming in down and trying to trigger short sellers into the market, right? So on that big dump day on Tuesday, short sellers are getting into the market. So it's trying to trap more short sellers because as the market breaks the current day, the current low of that day, so that's the low. So right, if you are sitting up here in the London session, at that point in time, the low of the day is the trade that occurred in the Asia session, okay? And so there'll be traders out there who will have orders to short the market under that area. And that's what this London session is doing. It's triggering traders to go short below the current low of the day. Okay, you've got to really think about what's going on in the market. Okay, these moves are not just random moves, they are engineered and designed for certain objectives. Okay, so in this case the objective is two. Number one, it's to trigger short sellers into the market on this move down. Let me grab an arrow on this move down, right? Number two, it's to, don't know if this will be a 2 now, it's a 3. Okay, so let me see, I don't know if I can reset that. Let's see. Anyway, the next thing is that it's trying to stop out anyone that's long from the Monday. Okay, so that's what's going on there. Now, because Monday has established what essentially is a weekly low down at this level, we know it's a weekly low because we've gone above that. Okay, so we've traded above that. Then essentially, any move down is really a buy. You're buying at the low of the week. Okay, and if it's a dump, as I've said before, prior to a session open, so this is the session of New York, that yellow box is the session of New York, and prior to the opening of New York, what do we have? We have a market that is dumping down prior to the session. And I've always articulated that in most cases, any move prior to a session is false, okay? So when you see that, you've got to break out, right? It's break out above the close of that day, the Monday, okay? So you've got to break out above the close, above the high, okay? On that Tuesday, we break above Monday's high. Okay, you then want to find some kind of a pullback into that weekly low. Okay, for a continuation, immediate target would be high of the previous pivot point, previous session, which was London in this case. Okay, so think about what's going on when you're looking at these movements. They are designed and they need to move in this way for certain objectives. Okay, so Monday's traded, right? Monday is, and I have on my platform this vertical line, this blue dotted vertical line. I'm not sure how well that's been recorded here on the screen, but there is a line there, this blue vertical line that denotes on my platform the start of the week. That means that this is Monday, okay, this is therefore Tuesday, and this is now Wednesday, third day of the week, and that's basically we're halfway into the week now, okay, and so far the market's been rising. Okay, now Wednesday is really what I would refer to as an inside day. Okay, an inside day is where the market has remained, so there's a high, okay, that's the high of Tuesday, right? And so on Wednesday, the market, sure, it went above slightly of that high, but not enough where I would say that's really a breakout. So in my view, I class that as an inside day. In my perspective, that day, Wednesday, has stayed within the high and the low of the previous day, which was Tuesday. We refer to that day as an inside day. Typically, you can have very big moves after an inside day. The next day or the day after is typically a large range day. Okay, so Thursday market comes back down below the low of Wednesday. Okay, now you can see that's a false break reversal because we've broken below Wednesday's low. It's false because we're back inside of Wednesday's low, and the market pushes down and continues to go up. False break reversal. Okay, now what do I see here? I'll see a pump up here. I'll see a pump up here. Okay, on Friday, which is a very key day at the end of the week now, we have what we've established a high of the week. Okay, Friday basically takes out the high of the week and reverses. Okay, it's another false break reversal. So Friday takes out the high established on Wednesday. Okay, Friday takes out that high. It's false because we come back into that high. We're back inside the range. Okay, now basically Friday closed at its open. Okay, I mean, in theory, technically, sure, it did close a little bit below its open. Okay, but in my view, that's basically at the same. It's balanced, right? Wherever the market opened, it pretty much closed. Okay, now Monday goes lower. So remember, from Friday, we've already got a break, which is false because we're back inside that range. So Monday goes lower and pushes back up into that high of the week. Isn't it magical, right? That's important because you kind of want to see some volume trapped up high. The market will not let those people who bought up high exit. Okay, the market will now pull away from anyone that bought up there as far as possible to, I guess, put pain on them, right? They bought up high and the market will now run away, not letting them exit. In fact, the market will try and blow out their accounts, and it does that by moving away. I mean, imagine traders who bought up here and now the market has moved 100, 250 pips below their entry. Okay, they are holding on to it because they think the market will come back up there, allowing them to exit, maybe for a small profit, or maybe a break even, but in fact, the market blows out their account. Okay, you can see that because the market goes back up into those traders, but doesn't go out all the way. It leaves those traders hanging on to their positions. The market comes up into that weekly high for a couple of reasons. Okay, that's the weekly high there. It comes up into that area to try and scare out any traders who may have shorted, right? That move down. It's all about manipulation. This market is full of manipulation. Your job is to identify that manipulation and be on the right side of the market. Okay, we've taken out a weekly high. We've come back inside of the range of that weekly high. Now we're pushing up into that weekly high. Okay, to me, that's the perfect entry, right? That there for me, the perfect entry. However, you don't know. The market may continue going higher and higher and higher because there's a lot of traders who are short from Friday the week before that are still in the money. Okay, at some point the market needs to go back up there and take them out, and that could be this move. Right, this London move could be going up there. Okay, so how do we know that's not going to be the case? Well, firstly, you've taken out a weekly high. It's a false break of that weekly high reversal. We're pushing back into that weekly high. Okay, and then we get this pump. Well, not a pump. We get this dump. Let me make this a bit bigger now. So we're on the Monday. Okay, after taking out the weekly high. I can't zoom into that while I'm recording, so that's okay. So the market now comes down before New York. Now, what have I said happens prior to the session? Any move is false. Okay, so this move down is false. Okay, so the market then goes back up into anyone that may have shorted from that level prior to the movement. Okay, so we know that we've made a new low. Okay, the market's made a new low from that previous day, Friday's New York session. Okay, and so now we can see that the market's going down. The trend now is clearly down. Okay, the trend was up. Okay, we get our consolidation. Okay, we get this move. We can see starting to move down. Now we're just waiting for a pullback into the key level, which is that high of the week. Okay, so we're not guessing here, right? In all of my videos, you can see we're always waiting for the movement in the direction that we think the market's going to go, and then we're waiting for a pullback. Okay, so we've moved up, we have stopped moving up. Okay, we're not short there because we don't know, we could continue moving up, but when we see the change in direction, right, we can see there's a new low here in New York. Okay, that low the next day continues, there's another new low, right? So the Asia on the Monday makes another new low. So we're clearly going down. We're now waiting for some kind of push back up into that weekly high. And our trade for the oil is basically in New York. We need to wait for the New York session for our trade. That's how we know we're on the right side, because the trade will always be in New York in most cases, right? That's the only time I will trade the oil market. And so we get this push up into the weekly high, and then the market starts to come down again. Okay, so we know we're on the right side now. Prior to that New York open, the market goes down. Okay, now what is this? If you can see, this is another false break reversal. Okay, we have the low there of Friday. Okay, the market goes through that, rejects it from the high of the week, comes back down, comes back inside the range, pushes back up. Okay, timing is important here. That there is that 9:30, 10 a.m. area where the New York session equity markets open at 9:30, and that's the best time to put these trades on, okay, so long as you have the right setup. We're also coming into a gap, right? Look at this area here. Let me get a box. That area there, that down candle, so this down candle, this big down candle, has only price delivery to the downside, which is a gap, okay? And so you can expect any movement in that area will be resistance on the way up, okay? Now, it's not just that gap. We're not just trading on that gap. There's lots of things that I've mentioned in this video that are building up for us to take this setup, okay? We've had this pump up, okay? We've had this pump up. We've established a weekly high, okay? That we've now gone through. We've established volume up high that's trapped. We've established false breakthrough the weekly high down, okay? We've established the market is moving lower, making lower lows, okay? So they're all the things that we're seeing. Okay, we're at the end of the week. This is Friday. All this is happening on a Friday. All these things are important, okay? And we're continuing to see that this false break reversal is in play. We're pushing back up into the high of the week on a Monday. The timing is important. That's all happening in the New York session at the right time, right? We're getting this move up, which is the manipulation inside of New York, pushing up into a gap, which we know should be resistance, right? So we're putting all of those things together, and then we get this nice move down 75 pips. Down on the Monday. Now, I would still be holding on to that, okay? My initial target will be the low here, which is where that pump started. But my ultimate target, as I've shown you from my post that I posted in the private community, was down to this, where this pump started, which we have now reached, okay? I think we'll still go a little bit lower. And even if all that is still too complicated, right, there's a much easier setup if you're a patient. And that move, which is very, very easy to identify, is this move on the Monday. Monday opens here and closes down here. And that is your first down day in this move up, okay? In this move up from that week. So Monday opens down, or closes down, I should say, okay? When you have that, where a market has moved down, and you've had the previous day, half the week taken, where you can clearly see the downtrend is now in play, okay? Then after that first down day, which is on Monday, right? It's over here. You've had market open up high, close down low. The next day, which is Tuesday, you want to be selling high. Now, where is selling high? Well, there's a couple of things to note, okay? You want to find a high from, so if I've established that, okay, Monday's my day where this is the first down day, I'm now trading on Tuesday and I'm looking for sell high opportunity. On the Tuesday, on this day, I want to see, where is the previous high, right? And that previous high is here, right there. And to me, that is where you should be targeting to look for an opportunity to go short, to continue this trend that basically becomes a pullback for the continuation, right? Now, again, it's putting all of those things together, okay? Your prognosis is that we've taken out the weekly high. And so we're going down a minimum to where that pump started from Thursday, okay? This is Thursday because this is Friday, because this is a Monday, because there is the blue vertical line that tells us that's a new start of the week. So you're putting all these things together. You have to have all these things in the back of your mind, okay? And so you see that this Monday is a nice down day. You're then waiting for a move up to sell high, okay? Now, you might not be able to really identify where that is, but at least you know what time that should be at. So when New York opens, and you can see that you're getting this engulfment candle, you can quickly identify, okay, am I somewhere high? Have I taken out a previous high? That kind of means this may be a sell high opportunity. Have I gone up at least more than 50 pips from wherever this started from? Okay, so each one of these boxes, I'm just going to draw over here, look over here where my mouse is. Each one of these boxes is 25 pips on this chart, okay? So there's 4 boxes there that make up 25 pips, which means this here is a 100 pip box, okay? So back here on Tuesday, right, here's Tuesday, here is that low prior to New York opening. And if I just count the boxes, that's 25 pips, that's 50 pips, that's 75 pips, that's 100 pips, okay? We've gone up 100 pips on Tuesday from London, right? I'll do it again. That box there, 25, another 25 means 50, another 25 means 75, another 25 means 100 pips. So you're definitely at a high in terms of price. And looking at time, you're in the New York session. If you look to the left, you have taken out a high, but you can also add in a few other things. If you look at where that high is coming in at, it's coming in at a key level. That dashed line is a institutional level, 0.50. So that price there is 83.50. So that's another thing. And then if you look to the left, there's actually a gap here. Let me get a box where the market has come up into. Okay. right there. Now, all of those things combined tell me that, okay, I might be thinking right. It doesn't mean that I'll always be right. So looking at all those things and specifically timing that engulfment at the right time on a market that has a first down day after taking out half of the week on Friday, now pushing up, right? In a downward trend market kind of tells me that, well, that's now New York inside of a gap at the numbers after seeing this engulfment at the right time in the New York session on a market like oil that trades in New York. Well, maybe I'm on the right side. And all I have to do is put on that position and manage my capital. That market shouldn't come back, right? So once I get this engulfment, then that market should never come back up here, which means I can quite comfortably add a stop at that high. Because if the market does come back up there, well, then I'm wrong. This is not the setup, okay? My initial target from that level is going to be at the low where that pump started, okay, which it reached quite easily. And that there's 100 pips, okay? From that high to where that pump started is 100 pips. That's a great trade. That's on a 15-minute chart, you're done. An hour's work and you're done. Or you can hold on or take partials off there, maybe take half your position off there if you're trading multiples, and then keeping the rest on to take out this pump, okay, from Tuesday, right? That would be the target as I posted in the private community that I showed you earlier on in the video. Now let's talk a little bit about day count, not something that I use a lot, but I think it does help traders. So Monday, start of the week, is going to be day one, okay? Tuesday, which is this day here, extends the range of Monday, okay? So we go above Monday's high. So that's Tuesday. This is Wednesday. As I said, to me, this is really just an inside day. Thursday is important because Thursday breaks the low of that inside day, triggering short sellers into the market and trapping them. Always look for the trap because that's the manipulation, okay? Thursday now pumps up, right? And as soon as I see that pump, I'm looking for a reversal. So we stop going up on Friday, and I'll explain the rest. We then start to get these false break reversals. We start moving down. We have this on the new week, right? The new week, Monday, we have a down day. And that's the first down day. The way you trade those down days is look for a selling high opportunity at the right time with all those things that I've said. That then becomes Monday again, right? This is Monday. Tuesday then, the next day continues and extends the range. So on the downside now, Tuesday extends that range to the downside. We go lower, okay? And we are now at the low of the previous week, okay? With the low of that previous week. And I think we still need to go a bit lower to take out anyone that is still in that market from the week before. So long video, a lot of great nuggets there. You need to rewind, pause, look at it on your own charts, identify everything that I've said on your own charts by yourself, go back and look at the previous week, look at the week before, look at the previous month. You've got to backtest this stuff. You've got to study these charts if you want to be able to identify the things that I'm showing you. Look for these pumps, okay? Look for these pumps. Look for where the market stops going up. Look at what day is that. Is that at the end of the week? Okay, is that a false break reversal? If you can't see that, wait another day. Be patient. Wait for something that's more clear, a clear down day. On that day, find reasons to support your theory, okay? If this is going to go down, then wait for a move up. Try to identify where is that sell high opportunity. Where can that come into? Most importantly, timing is what's going to tell you. And what does price do at that time? How's price behaving? Do we get engulfment at the new hour, at the key times? Are we trading into a gap on the way up that's going to support your theory that could be resistance and we're now going down? If we are going down, why is it going down? Is there a pump on the left that it needs to go down to? There needs to be a reason. Is there a pump on the left that needs to be the catalyst for the move to go down to that level? Okay? So I hope it's been useful. Study the charts to learn price action as I am teaching it to you. I will now talk with you in a future video.